Okay, good evening, grade 10s. So we are going to do ledger account interpretations. This exercise is from the New Era textbook. It's task 5.24 on page 161 and 162. I sent it to you earlier in the day, so you can just refer to that. So now this is what you got. It was in this format though. It looked like this is what you got. But we are not, so I just put it in Excel so that I can be able to enter the missing amounts and missing account. So for this video, I'm just going to do the debtors control and the creditors control. We can do the other account in the next video. So the purpose of this ledger interpretation is to make sure that you understand these ledgers. What you need to know the most is still debt click, number one, which account increases where and which account decreases where. So assets, expenses, drawings, and debtors control will increase on the debit and decrease on the credit. Then we've got capital, income, liabilities, and creditors of control increasing on the credit and decreasing on the debit. That's the first thing you should know. Then the second thing you should know is the journals. What do you record in CPJ? What do you record in CRJ? What you record in DJ, DAJ, CJ, CAJ? And then the general journal, which we of course know. We record anything, examples being errors and charging interest. Before they pay the interest, you need to charge it only. So those are the examples. So now let's look at the status control. It will come in any way. Sometimes it's the accounts missing and not the folio. Sometimes it's the folio missing and the accounts are there just like here, like on the side. So you need to just know debit or credit, debt click, and you need to know which journal. What's the purpose of each journal? That's what you need to know. So when we look at debtors control is when people buy goods on credit from you. So we've got the purchase of goods on credit, the payment of the goods, the discount given, and the interest charged and all that. But we haven't really done interest charged on here yet. So so now balance brought down will be on the debit because the debtors control increases on the debit. That one we should know. If there's any blank thing here, you just know it's balance brought down. It's on the debit. Then we look at sales. Sales either comes from CRJ or what else? DJ. But if it's debtors control, CRJ is eliminated because you already paid for those goods. You already received, the people already paid for those goods. So you already received the money. That's why it's in CRJ. So they owe you nothing. So which leaves us with, if you see sales on the debit side, it means people bought on credit, sales increased. I mean, debtors control, the debt increased and the sales increased. But in the sales account, it will be on the credit side, which I'm not going to go to now. So it's obvious that it's going to be DJ because that's how the CRJ is out because there is no debt there. Let me go to the easy ones first. This amount is for you to work backwards. Right now, that's not what I want to focus on. So I'm going to give you the amounts. This one was given as 420. These totals were 18. Okay, no, not this one, sorry. This one here. 18,832. This one, 18,832. And you know, of course, this one will be the same as this one, as always. 8,482. Because I don't want to test you on numbers yet. Although you know that cost of sales, if you've got sales, you use the markup to get cost of sales. If you've got cost of sales, you use the markup to get sales. Otherwise, the rest is fine. So now, debtors control CRJ. So there's only two things that come from the CRJ. The first one is given to us. So sometimes it will be blank here. Then you must figure out from the CRJ, the only contra account for CRJ for debtors control will be bank. The first contra account, there will be two. The first one will be bank from CRJ. So the credit side means the debt is reducing. So bank means they paid off their debt. But what else is in the CRJ? There's only two things in the CRJ. So if they didn't pay off the debt, which means we gave them discount, but we put it in the CRJ because normally the discount allowed goes together with the payment made. So you tell them if you pay within 30 days, you're giving 2% discount. If you pay, so it's always go to the CRJ because it comes with together with the payment. So which makes you know that this one now then will be discount allowed. One will be bank and one will be discount allowed. That one does not change. Discount allowed. And then DAJ. So this is what I'm going to talk about now. So DJ, which is debtors journal, and DAJ have two columns, two accounts columns. Unlike CRJ, CPJ, they've got a lot of columns. So DJ, you can think it in your mind before I say it. It's got sales and cost of sales. DAJ will have debtors allowances and cost of sales. So this is when you sell goods on credit, and this is when they return on credit. So you already know. So those are the only columns. There's nothing else. So you only know, that's how you know that when it says DJ, it will be sales and it will be the side because it's increasing the debt. When it says DAJ, it's reducing the debt. It's just debtors allowances. People are returning. It's reducing the debt. But the contra account is no longer sales, but it's going to be debtors allowances. So when you see DAJ, you know that it's debtors allowances. And that's it. Then the one thing that they didn't include here, which I'm going to include quickly, will be the general credit and the general debit. So in the GJ, you always have this column. I'm going to highlight it so that you know. So you always have, besides that, the normal transactions, then you've got the debtors control column with the debit and credit, and the creditors control columns with the debit and credit. So these columns, we'll talk about all errors, everything that happened on there. These errors, this will talk about all things that happened on there. So if it's on the credit side, it doesn't matter what it is, you call it general credits, on the credit side, credit. So it's like the total of everything that you did in the GJ. And then you call this general debits. That's how it works. Doesn't matter the amount, I just want you to know. So now, what I can ask you here, so I'm going to highlight this. What I can ask you here is, what examples do you think, examples of transactions that will go in the GJ for the debtors control? So the one, for example, will be if we charge somebody else's account instead of somebody else. So it will go to the GJ to remove it from the wrong person and putting it into the right person. Or the one person made a payment, but we recorded it on someone else's account. So we removed the debt. So we put the debt back on the person who we're not supposed to take the amount from, and then remove it from the right person. That's one thing you can put on there. The other thing is if the debtors are late and we want to charge them interest. So correction of error or charging of interest, or bad debt, we want to write off a bad debt. So do you agree? Yeah, so that's what we would also include there. Oh, and then before I forget, bank is supposed to be on the credit side from the CRJ. So if you see bank on the debit side, it's obviously not from the CRJ, but there's only two journals with bank, CRJ and CPJ. So it's obviously from the CPJ there. And why would bank be on the CPJ? Because we do not receive, we do not have to pay debtors. So if bank is on the side, it means we pay. So we do not have to pay debtors. Why would it be on the debit side? And the simple reason is that maybe the person paid too much and we are refunding them. That is the reason why we would have bank on the debit side. That is the only reason, but it's not common, but it does happen. So I think that is what I'm going to teach you about the debtors control. I'm going to make a separate video for the creditors control. And on another day, I'm going to have to also talk about the other accounts like trading stock, sales, and cost of sales. But for now, let's stop here. Bye for now, guys. Thanks for listening.